I'm doing a series of videos on raising money for blockchain products. In a previous video, I talked about raising money from grant funding and or from treasury funding. And in this one, I'm going to be talking about private rounds. I've got to split this one up because I fear my video will be a bit too long. So there's going to be a part A and a part B. Let's jump into it. I see that there's 3 phases of funding. This is not like the perfect model. This is optional. You don't have to have these. The first phase, as I mentioned in a previous video, was grant money. Then I see like a VC phase or a private phase, and then lastly a public phase. You can skip as many as you want. It's purely optional, or you can do them all. At this stage, when you're asking for money from VCs, you should be really clear on what product you're building. Yes, you can pivot. It's not that that doesn't happen. It does. It's just that if you're really unsure, you're probably still at the grant stage or even the founder stage. Try to get a better idea and then move on. So let's dig into this a little bit more. For the private stage, there's many things that you need to get lined up and that you need to do. I've got a list here, which is more for like the operational side. Again, this is more about the raising money part, so not about the coding that you have to do to build your product at this stage. And again, I think there's probably going to be too much here for this one video. That's why I've got the darker part and the lighter part at the bottom. It's going to be a later video. In this video, I want to talk about valuations. What do investors expect? I want to talk about how to find the investors, and I want to talk about a little bit about having a pitch deck. Other really super important stuff is your legal entity. Where is it based? What is the sort of type of structure that you have? What sort of entity? Intellectual property. I'm not an expert, but it's some things that you have to look out for. And then banking, which is also a pain point for crypto businesses and crypto entities. I don't think I'm going to have time to cover that, but it is super important. So look out for the next video. So let's dig in again. Let's add more and more details here. A private round can be structured as 2 stages, a seed stage and a strategic stage. The seed stage is getting enough funding for 1 year or 18 months, give or take. You've probably got a few investors, say 5 to 10, and I'm saying it's a low valuation, which means it's got a discount relative to later stages. And minimum ticket size is maybe say 50,000 or 100,000. 25,000 is also possible. It's not so common, but you can kind of pick any number you want. I've seen one team do 300,000 for their minimum. For me personally, I think that's a bit high, but you can choose whatever you think is best for you. From what I've seen, 100,000 is pretty typical. Oh, and vesting. You really should have vesting. You don't want to unlock the tokens all at launch. I even caution like 50% or even 30%, because we've seen so many trends now, or we've seen a trend, shall I say, of investors getting their initial 30% and then just dumping. And it's just not a good look. The strategic stage, which may also be called growth stage, is where you have a higher valuation. You ask for more money. You probably have more investors, and you should also still have vesting at this stage. There's like a ratcheting up of valuations going from the seed stage to the strategic stage. It kind of locks in a little bit of the value for the early seed stage investors. So what are typical valuations? So right now in Q2, when I'm recording this video, I've seen valuations of around 15 million to 20 million for non-DeFi teams. Most of my experience of the teams that I've been working with, this is what I see. I don't really see too many DeFi teams, so I'm a little bit less knowledgeable here. The round size, 750 is, at the low end, you do see it. And 2 million is like the upper end. Again, you don't really see 2 million so much. Sort of 1 million to 1.5 is like the sweet spot that I've been seeing. It's really quite typical. It is also worth saying that in Q1 of this year and sort of Q4 last year, the valuations were noticeably lower. So as the market has moved up, the valuations of seed stages has moved up. DeFi tends to be just higher. I've seen a number of 50 million. This is what I calculated for Equilibrium, who raised in April. This is not insider knowledge that I have. This is just numbers that I found through Googling and then just doing the calculations. And the round sizes, from what I can see, are also pretty typical. DeFi is just higher in terms of valuation. People just expect there to be more money floating around, so the valuation is just naturally higher. That is the way it is. So the strategic sale is going to be some months later than your seed stage. There's no perfect rule here for how many months you should wait. The quickest I've seen is 3 months. It could be 6 months. It's basically, you should be building something. You should be building some of your product in between the seed and the strategic part. The valuation will be higher, as I've just said. Here in Q2, these are the valuations that I have seen from the teams that I've been working with. Something around about 30 million is the low end, up to 100, or even slightly more. Is this justified for non-DeFi? Well, it depends what the market thinks, which is always the case. Does the market accept your valuation, yes or no? Round sizes, even though your valuation can be much higher, your round size isn't so much higher in my opinion. Again, you're giving away maybe 5 to 10%. DeFi valuations can be higher still. I have heard that they can even be 500 million because that's the way the market is, and DeFi is just kind of super sexy. But even though the valuation here is higher for DeFi versus non-DeFi, the round actual size, the amount of dollars raised for the team is not so much greater. Basically, they're giving away a smaller portion of the pie. How long could those funds last you? Well, in my mind, if you raised 10 million, that's quite a lot. That could last you for quite a few years, especially if you have a small team. For a bigger team, obviously not, but even 2 million, I think, if spent wisely, could last a few years. So it's kind of, should you be raising this within a year if you still have enough funding from your seed stage? That's not really a question for me to answer. It's just what we see in the marketplace. This is very typical. This is what happens. It is also optional to do the strategic sale. You don't have to do it. Now, let's say you've done that. And also keep in mind that you're probably going to be heading towards some sort of public sale. That's one thing to also keep in mind. I would say don't give away too much of your valuation before the community can get involved. So let me actually move on to what I want to say in this slide, which is about finding investors. The funny thing is, if you're not at the stage of finding investors, you may be thinking, how do I find investors? Is it not really, really difficult? And you may be quite nervous about talking to them because you've never done that before. Well, the funny thing is, many will come to you and they may be quite desperate to come to you because they're looking for the next big thing. And crypto is very, very sexy and very, very hot. So you need to be found. That's the thing. If you've got a Twitter and a Medium and you've got some presence on Telegram, then investors are really going to find you. I think these are like just the main things. A website you usually should have just because, why wouldn't you? If you're on the grants accepted page, then again, this is like some soft marketing for you and your team. Investors will find you. Do you naturally have a token? Now, this is not really so much about how do investors find you, but it's kind of more like what would make them come and find you. If you don't naturally have a token, then investors may be shying away from your project. If it's kind of obvious that you will have a token, or you've even said somewhere on your website, we will have a token, then they will come in, they will email you. They will find out how to get in touch, and they will get in touch. The last part here is actually introductions. So introductions from friends or other people working in the industry who know investors, it can be a great source of finding the investors. So I have a very small thing to say upon that in a slightly later slide. So that's for inbound requests. The other thing is outbound, so for you to go and find investors. It just so happens that I and the people at the Polkadot market community, we've put together this list on Reddit of 90 plus investors. I've stopped updating it now because I think 90 plus is a good number. On the left side here it's basically a snapshot of this investor list. And I think there's some really good names on here that if you're to go and ask some of these people here, it will be good. There are some good investors here. And that takes me to my next point, which is be patient with the investors that come to you. If someone comes to you with absolutely no name, do you really want to take their money? I don't say it's because they're necessarily a bad person. It's just that you don't really know much about them, and they could be a bad person, but they may not also have much value that they can bring to you. It's like, here's the money. But that's not really enough in this day and age, at least where we are in the bull market. There's lots of people who are investors. Everyone's a VC now because they've got big money with crypto. You know, all the tokens have gone up, so now they're a VC. But what experience do they have as a VC? What value can they bring beyond just giving you money? And there's few investors who can really do that. Some can. Now, I'm not saying block every investor who can't give you like this, you know, obvious extra value, but, you know, think about it really, really hard before just giving away, you know, some of your tokens. I say give away, it's maybe not entirely fair because they're going to give you money. But let's dig into a couple of the details here. So one of the soft benefits is the signaling of trust. Having good investors in your team will signal to the market that your team is trustworthy and probably of a certain pedigree. If these investors like you so much that they want to invest, then they may even tweet about your team, or you may even get some sort of press release mentioning the fact that you have been invested in. And that's good for finding users and building your community. Some of the, I call it harder benefits, maybe I'm kind of, it's a false dichotomy here, but introductions to their network. Getting introductions to more investors, which is good for you raising money. Potentially they know of people that you could hire. Again, you have to grow your team once you have the money. They may help you with some marketing agencies. This can be hit and miss, but it's something you may want to think about if you want to basically grow your user base. And then lastly, exchanges. Some of these investors may have good contacts to exchanges and they may be willing to negotiate on your behalf. Now, you have to be very careful because you're not really supposed to negotiate with exchanges. It's an interesting point that I can't really talk about as an expert. I have some knowledge and I say you have to be very, very careful here. And it's probably something that would be worth maybe even a later video, but I'm not even sure that I could properly talk about it. So I don't want to really say too much more here, but keep it in your mind. Pitch deck. A pitch deck is really important. It's funny that, you know, in this day and age that investors really need it from you. You know, why can't they just look at your website? And maybe some investors don't even need one, but I think put one together. It's a good exercise for you as a builder just to get your thoughts into the right place, to be logical and coherent. There's a lot of examples online. There's templates online. Here, what I've included below is, you know, it's like 10 points or whatever of like the main slides that you should create. These are the things that you should be covering to talk about your product. One of the things I think to really focus on is the roadmap. Talk about what you have built and what you will build going forward. The token economics is about what your token does. It is kind of important, but not as important as the token distribution. How are you dividing up the tokens that you've created? Who are you giving them to? And in this slide also includes something about the round details, i.e. how much you're going to sell to investors and what is the valuation, i.e. you're selling 10% of your tokens at the valuation of $10 million, therefore you're going to raise $1 million to your pocket. This is what the investors want to know about. They will try to do some, basically it's a gambling, if you want to call it that. They'll try to do some calculations on their own side, in their own head, and say, oh, you've got a valuation of 10 million. Do I think I can make a 10x on this? Now, that's what they're thinking because they're investors. They're early stage, they're taking on the most risk, and they want to get a good return. It's important to be thinking about what that might look like. It's kind of looking at the valuations I've just talked about and then just getting it right, basically. So there's not really much more that I want to go into within the time that I have here. I want to just push on and talk about something else which I think is really important that I didn't actually mention at the start of the slides. And this is, you should grow your network. You should be friendly with other teams, other builders. If you can get friendly with investors, that's great, but being friendly with other teams is a good source of information. You know, maybe they can recommend investors to you, or they can give you tips for your pitch deck, or maybe they can give you their pitch deck. I don't want to promise this, but sometimes teams are willing to share. This gives you a point of comparison and it gives you an idea for what's involved. They might also discuss the pitfalls that they faced, and they can talk about the successes that they've had. One thing I didn't mention about the presentation that I really should, which is you should probably get a graphic designer to finish off your pitch deck. You really want to have something nice looking whenever you send it to investors. Make it appealing to their eyes. Psychologically, I think it really helps kind of tip them towards a positive side on whether they want to invest in your product or not. So don't sort of scrimp and save on that one and create Google slides like I am. It just doesn't look as good. So that's one thing that you can really do, which is better than what I'm doing here. So keep that in mind. And yeah, I really can't emphasize that enough. Just make it look nice. That's pretty much everything I wanted to say. I managed to keep this one pretty short. I'm surprised. So I run this community called Polkadot Market. We have a Discord and we have a Reddit. Most of it's talking about prices and price action, which I know that builders may not find as interesting, but we do talk about crowd loans. We do talk about the auction strategies, and we talk a bit about the valuations of whether we think a valuation is good or bad, or whether we think it's worth it. And I think that's something that's worth informing you builders. You will be thinking, if you're building a power chain, then you will be thinking about what your strategy should be, and you're probably thinking about what the valuation should be. And I think just more generally, just being informed about what the market thinks of different teams and projects and valuations is really, really worth knowing. This is something that we discuss over here in this community. So I want to encourage you to come and to join. I welcome you to do that. And I want to thank you again for watching another video. And I will see you in the next video, where I will be talking a little bit more about the private round. It may not be super sexy, as interesting as this one, but it's also worth knowing about. So thank you very much.